In the energy quadrant, taking a look at the February natural gas futures contract, which has had quite a bit of price volatility over the last few sessions. Natural gas has had some wide price ranges, including a pullback today early that did not last. Since the start of the year, natural gas has basically operated in almost 24% range, including several opening gaps, one of almost 8% and another one on January 13th of almost 9%, which closed by the end of the day. As I mentioned, though, we did have a slight pullback today, but we got a rally in toward the end of the day. The high was 4.198. That was up 2.82%. And the low was 4.018, down 1.59%. And with some time left in the session, we are nearer to the highs than to the lows, still up about 2.6%. National demand has to be part of the reason for the overall rally we've seen. Overall moderate national demand will persist through Saturday, then we'll get very high national demand going into next week. The U.S. interior is getting a mild break this afternoon through Saturday from the Arctic blast they suffered through last week, sending highs in the 30 to 50 degree range, but late Sunday, early Monday, a new blast is coming through, pushing temperatures down to minus 20 degrees in some places on the lows and only 20 degrees in others, and then 0 degrees to 30 degrees on the high side of things. That'll push demand into the very high range. Even in areas like Texas, North Florida, and inland Florida, we're going to see some temperatures in the 0 to 20 degree range. We also had the EIA report today, which produced a draw of 258 billion cubic feet, which was in line with expectations, but much higher than the 5-year average for this time of year, which sits at about 255 billion cubic feet. The draw dropped supplies from 3,373 billion cubic feet to 3,115 billion cubic feet, while decreasing surpluses from 207 billion cubic feet to only 77 billion cubic feet.